Can't forget about the macro situation as the Fed meets today. We hear from the chair tomorrow, and some still holding out hope for an extreme move, a cut. Danielle DiMartino Booth joins us, CEO and chief strategist for QI Research. Danielle, that's totally off the table, right?
Yeah, look, this Federal Reserve and certainly this Federal Reserve Chair Jay Powell, they're not about surprising the markets. And when you've got a south of 10% chance of a rate cut tomorrow, I just don't see that happening. I think it's steady as she goes with the hopes that the distance between now and 7 weeks from now is going to be not too long to wait for that first rate cut.
All right, so even if we do another 7% down NVIDIA day tomorrow, Jay Powell not watching markets at these levels?
Well, look, I think Jay Powell welcomes what we're seeing. I think he's wanted a lot of the froth to come out of the markets, a lot of the speculation to come out of the markets. Many of the reporters in the press conference that have followed the FOMC statement have pressed him on financial conditions being so easy. So it seems as if maybe they've gotten what they've asked for because now we're starting to see the lagged effects of the Fed being higher for longer, really, than any time since really before the financial crisis.
Yeah. How restrictive do you think they are right now without an option to move in August, only Jackson Hole? Could that be putting strain on the economy at this point through September?
So I think it really depends on the perspective of the player and the economy. I mean, I just arrived on this great island of Manhattan, and buildings are selling for 50% discounts, 57% discounts. And I'm talking about good buildings as well. So it really depends on the type of player that you are. Commercial real estate is obviously in the crosshairs. We're hearing terrible things out of the car industry. People do not have access. U.S. households do not have access to credit in order to prop up the spending. That is 70% of U.S. economic output. It's going to make a difference, and I think we're starting to hear that in a lot of these earnings releases.
So if they have 100% mapped out for us, what the market right now, Fed Watch tools have 100%, some of the betting odds places differ a little bit, but to have this much conviction for September, November, December, to know we're going to get to basically the market saying, what does Powell need to do to start laying the groundwork for that tomorrow, Danielle? What are the words? What's the tone if we're going to start getting the dominoes in place for Jackson Hole and then the cut?
So I think what Powell needs to do tomorrow is to be very resolute in saying September is on the table. This is no longer a subject for debate at the Fed. We've decided that it is go time. We're already easing because we're not shrinking the Fed's balance sheet to the same extent that we were before. So the Federal Reserve is already in an easing mode, and you're going to hear more of that echoed from other Fed officials here in the weeks that do lead up to Jackson Hole.
Okay. And then for that delivery, that's when he really maps it out for us and kind of gives it to us on a silver platter?
I think that he is as data dependent as he claims to be. And when you see private sector hiring lower than it was in 2019, when you see the tone of the data that is getting worse so quickly. We've got a payroll report that's out this Friday morning. He will not have that data in hand, by the way, when he steps up to the podium on Wednesday afternoon. So he won't get that until 24 hours before that's released. But again, the data right now is fairly unequivocal, and I think that the public wants to hear from Powell a lot of confidence that he is ready to move on September the 18th. No more waiting.
How much certainty do you think it will be the beginning of a cut cycle? And should we look to other central banks the way they've kind of paused, taking it step by step? Is that a blueprint?
Yeah, it could be a blueprint. If it is, then this time it's different. And we have to remember that it's not usually the Fed that's following other central banks. It's the Fed that is setting the pace, and we have yet to see, at least in Fed history, for there to be a pause after we get the rate cutting cycle going.
How rough do you think the economic situation is, Danielle? Might we be going off a cliff between now and the election, or do we still have some breathing room?
I'm not sure how much breathing room we have when you have CEOs coming out with their earnings reports and saying if we don't get aggressive rate cuts and if we don't get them soon, we're going to be laying off more employees. I don't know how much clearer you can get. That's pretty black and white. If the Fed doesn't move, we're going to move through with another round of job cuts. And that's exactly what we're seeing, one company after another. When they release their earnings, if you see a pop in the stock, inevitably, somewhere in the fine print, there were layoffs that took place.
Now, are you some of this I've kind of determined implicitly that that's what's being suggested, but in some cases you're saying explicit in your earnings analysis.
Absolutely. And we are seeing more and more CEOs, especially in companies that face the consumer, saying we've not seen the relief that we thought, we've not seen the pickup in consumer spending that we were hoping for in the second half of 2024. It's now a 2025 event predicated on the Fed being aggressive in the upcoming rate cutting cycle. They're spelling it out for Jay Powell, and this is somebody who founded the Industrials Group when he was at the Carlyle. I know he speaks to hundreds of CEOs. If they're saying it publicly, Lord knows they've been saying it to him privately as well.
Yeah. All right. So then, Danielle, do you have strong thoughts on what we should be thinking about post-November? Or it seems like there's a lot we got to get through between now and the election. Is it even worth trying to game theorize beyond that at this point?
Yeah, it's really hard to say, once we pass what, the street looks at, the SOM rule, once we get past that, probably on Friday, it really is off to the races. I think that traders in the pits will start to game whether or not we're going to see a 1/4 percentage point move or a 1/2 percentage point move straight out of the gate in September. Again, the distance between these two particular Fed meetings, the 7-week long distance, it's a lot of data in between now and then, and we could easily see a second rate cut the day after the election. Remember, the November Fed meeting is not a Tuesday-Wednesday FOMC, it's a Wednesday-Thursday FOMC, so as to not be meeting on the actual day of the election.
Like that. Danielle, one more. You think we will trigger that SOM rule on Friday?
I think that we're so very close. We were up 0.43%. It looks like we're going to cross 0.50%. We've certainly seen an uptick in the number of large business bankruptcies, restructuring, layoff announcements. If it's not picked up in the data, you're going to get more conspiracy theorists out there saying, gee, they're cooking the data in front of the election. It's really becoming quite the bad look for the statisticians in Washington, D.C. to have such a great big divide between what companies are telling us they're doing with their headcount and what we're seeing in the formal data. So yes, I do think we're certainly going to cross that Rubicon come Friday.
All right. Good stuff, Danielle. Thanks for the catch up. Appreciate your time.
Thank you. Take care.
Absolutely. Danielle DiMartino Booth, CEO and Chief Strategist at QI Research.